Russia overnight launched its long-anticipated attack on Ukraine, striking military posts across the country.
Start investing for beginners. Ukraine-Russia war, Israel-Hamas war in Gaza. What could happen to the stock markets during World War III? Let's study the past wars to predict the future wars. And also, we can learn from Warren Buffett, who invested during World War II, and how to prepare for World War III. At the end of the video, I want to give you my 3 best strategies for World War III and what should you not invest in during World War III. To understand how long World War III could last, let's study World War I and World War II. World War I lasted from 1914 to 1918, 4 years. Remember, 4 years. How about World War II? World War II was from 1939 to 1945, 6 years. So if there was a World War III, it could potentially last from 4 years to 6 years. Of course, if there were nuclear wars everywhere, the world could collapse within minutes. But I do not see that happening. One thing is for sure, it would definitely last a few months to a few years. Let's study how stock markets performed during World War I and World War II. According to S&P 500, S&P 500 data only show from 28 October 1983. Nasdaq the same, 28 October 1983. Dow Jones from October 28, 1983. S&P Index Fund was started in 1975. So there was no history about S&P 500, how it performed during World War I or World War II. But if you look at the past events after World War II, you could see that S&P 500 dipped, but it went back up again. It dipped, it went back up again. It dipped, it went back up again. It doesn't matter how big the disaster was, it went back up again. Because there was no S&P 500 index fund at the time, what should we do? We can study the past wars and also we can learn from Warren Buffett, who invested during World War II. During American Civil War from 1861 to 1865, stock markets went up 112%. During World War I from 1917 to 1918, stock market was down only 70%. That's shocking. You would have thought stock market would be down a lot more. And also American Civil War. Remember, the whole America was having a war at the time. Stock market went up. And World War II from 1941 to 1945, stock market went up 66%. That's quite a surprise. Let's look at performance of asset classes during World War II. S&P 500 nominal return 110%, real return 62%. What's the difference between nominal return and real return? Real return is nominal return minus inflation. So that's what you should be looking at. During wars, governments printed a lot of cash to buy weapons, to buy materials, to facilitate war efforts. So inflation was rampant. It's very normal to have inflation during wars because everybody will be buying so many stuff, so much food and so many materials to store and stay home. Remember, it's the same as COVID 2020. Supply chain will be impacted. Not many factories will be in operations. Let's look at 3-month US Treasury base. Nominal return was 2%. Real return was negative 23%. 10-year US Treasury bonds, real return was negative 17%. And US corporate bond, real return was only 5%. What a surprise! S&P 500 outperformed other asset classes. That's pretty good. So what are the industries that's gonna perform the worst and the best during world wars? A performance of industry during World War II, The worst industries are consumer goods, aircraft, because nobody will be flying during a war. Agriculture, shipping containers, nobody will be shipping containers a lot. And steel walls, that's quite surprising. Maybe after war, a lot of construction rebuilding is going to happen, but during the war, there will not be any infrastructure projects. And insurance, chemicals, communication, and tobaccos. Looks like everybody stopped smoking during the war for some reason. How about the best performance? Constructions, trading, wholesale, restaurants, medical equipment, and the most surprising is printing and publishing. Why? Because everybody will be reading news. There are a lot of bad news during wars. So every day people want to read news, and printing and publishing is the best performance industry during World War II. And beer and liquor, people want to drink. They are sad, they are depressed, they stay home. Even during war, a lot of soldiers gonna drink beer, alcohols. That's pretty normal. And personal services, entertainment, real estate. I guess people want to buy land or buy houses, because during a war, if you buy land, it's very, very hard to destroy. You wouldn't see any big hole in your land, even though there's a war. So I think people just want to buy land to preserve cash. Remember, cash is worthless during a war because governments are printing so much money to buy weapons and to manufacture a lot of goods. Medical equipment, hotels. Surprising. Lots of people are traveling. Wholesale, trading, constructions. And let's look at Warren Buffett. During Berkshire Hathaway's annual meetings, Warren Buffett showed these lines. The Japanese smash bundle lines, offensives by USSC near Tokyo holds fresh forces into drive for Rangoon. A lot of bad news. And on March 8, 1942. On March 9, 1942, another bad news. Japanese invade New Guinea, claim Rangoon, push west in Burma, Java silent, reported surrender, deny. A lot of bad news. War is getting nearer to America. And March 10, for full clearing path to Australia, reports 98,000 gave up in Java. 6 ships hit by US submarines. There was an impact with US and Japanese armies. President Roosevelt warns of inflation, parallel in rise of prices. So many bad news. On March 10, what did Warren Buffett do at the time? On March 11, Warren Buffett bought his first stock of CD Service preferred share at $38.25. That was his first ever stock that he ever bought. And after he bought, the stock dropped to 27. So he got a little bit panicked. But stock recovered in July 1942. He sold the stock at 40, pocketed and gained off 5.25. You would say, oh, he got lucky. So if you look at now, after 4 years, he sold the stock at 1942. After 4 years, the stock went from $40 to over 160, more than 4 times in 4 years. So will you say that he got lucky? Of course not. Of course, if you were in 1942, you would have thought, oh, he got really lucky. The stock dropped to 27. He bought it at 38.25. He was making loss. Now he recovered a little bit. He sold at 40. Of course, he was lucky. That's what you have said at the time. But if you look at the big picture, he made a big mistake. If it's a great company, you hold. Because CD Service Company is a natural gas company, so natural gas were in demand. So the war was happening during this time, the whole time, 1942 to 1945. Of course, at 1946 the war ended, so a lot of stock recovered a lot, much more. So the moral of the story is always buy good companies at a great price when everybody got panicked. That's how you made a fortune. If Warren Buffett invested the same amount in S&P 500, how much could it be? Buffett calculated what his $114.75 would be worth today had he invested the money in S&P 500 index fund with all of its dividends reinvested. Remember, S&P 500 index fund started in 1975. Based on his calculation, his stake would have been worth pre-tax $606,811. That's quite a lot of money on January 31, 2019. So, if you invested $10,000 in S&P 500 that time, how much could it be in 2019? Comment down below. Are you ready for the answer? $51 million. That's a lot of money that you could get by investing in S&P 500 without doing anything. Just $10,000. That's what Warren Buffett said in 2018 annual meeting. Berkshire Hathaway. Now I want to tell you my 3 best strategies for World War III. Strategy number 3. I may start buying put options at the beginning of the war. Remember, when war breaks out, stock market could drop a lot at the beginning. Remember, a war could take a long time, a few months to a few years. So since the beginning, war's news could come out every day. Stock market could go down much more. Initial drop could be this much, but after that, every day, every month, the drop could be a lot more. So my strategy will be to start buying put option at the beginning of the war to protect my portfolio and also to make profits. If the war drags on longer, stock market could drop a lot more and I will be making money on put option. At the same time, I will be holding my stocks. Next, strategy number 2. Our DCA, dollar cost averaging. I have a few great companies that I really like when they get undervalued because of the war, and if they are still in operations, I will just keep buying every month or every quarter, little. Just remember to make your money last for a few years. World War III could be long. I'm sure it will be at least a few months to a few years. I will use advanced option during the war. Advanced option use call option and put option at the same time. So that is good for any market situation. When the market goes up, it's good. When the market fluctuates, not going anywhere, it's also good. When the market goes down, you can also make money in advanced option. And my best strategy number 1, I will start buying call option at the end of the war. When I see the sign of war ending, I will start buying call option. Stock market could probably react before the end of the war. I will see the sign, the market reversal sign. Once I see that, I will just start buying call option. Remember, when the war is officially over, it may be too late to buy stocks or call options. Comment below if you want to know the best stock setups and stocks to invest during the war. I may make a new video. So why should you not invest in World War III? I'm going to show you what Warren Buffett said in a clip.
This could be the beginning of something really bad. It could be even a World War III situation. It could be a return to the Cold War. Does any of that ever go through your mind?
Well, if you tell me all of that's going to happen, I will still be buying the stock. You're going to invest your money in something over time. The one thing you could be quite sure of is if we went into some very major war, the value of money would go down. I mean, that's happened in virtually every war that I'm aware of. So the last thing you'd want to do is hold money during a war. And you might want to own a farm, you might want to own an apartment house, you might want to own securities. But I mean, during World War II, the stock market advanced, and the stock market is going to advance over time. American businesses are going to be worth more money. Now, dollars are going to be worth less, so that money won't buy you quite as much, but you're going to be a lot better off owning productive assets over the next 50 years than you will be owning pieces of paper, or I might throw in bitcoins.
Like he said in the video clip, cash will be the worst investment during World War III or any war, because government's gonna print a lot of money. When you have so much cash, it devalues the currency, and they will buy weapons, they will manufacture weapons, and they need to buy materials, and also a lot of people are gonna buy food, storage, land, anything. So inflation gonna be high, your money gonna go down in value, so cash gonna be trash during the war. So it's best to buy either land or stocks. If you have any question, comment down below, share, subscribe. Do you want to retire early? Do you love freedom? Do you want to work only 1 to 2 hours a day while traveling around the world and spend more time with your family? You can start stock investing and option trading right now. If you want to know more about finance, stocks, options, real estate, crypto, check out our playlist: stock investing, stock trading, option trading, real estate, cryptocurrency.